Good morning, everyone. Welcome to Admiral Markets. My name is Chris. Thanks for joining us in this strategy webinar looking at the Forex market. We're going to take a look at the charts in just a second. Please be aware, though, that this webinar is intended for a global audience, but may not be suitable for everyone. Take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity to find out more about that, conditions, and other details. Then, of course, there's also the fact that trading for exchange and other financial markets is considered high risk, and it may not be suitable for everyone. Please seek advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer and you are aware of the risks involved when trading. I've said it before, but take a look at this Supreme Edition with 56 additional features on the Admiral Markets website. You can find out more about what the features are and how you can add it to MetaTrader to make your trading simpler. And you can see other interesting buttons, for instance, analytics and education, where of course you can sign up for webinars like you just did, and analytics, all kind of analysis, wave, technical, fundamental, heat maps, etc. All right, so let's take a look at strategy today. I was thinking about Fibonacci strategy myself, but if you have a preference, just let me know. There are only a couple of you today in here, but less than usual. Probably, I guess it is in the middle of August, so it makes sense, and it's good that people take breaks and take a week off or two to mentally refocus, because that is important. And it's vital to keep that balance, because if you're ultimately trading with too much baggage, maybe too tired, or whatever it could be, not 100% focused, then that is not good. So it definitely very important. All right, but if you have back to the point, if you have a preference, let me know. So with that said, we're going to take a look at the market in just a second. First of all, though, a quick glance, an important glance at the calendar. Well, of course, we know already that at 2 p.m. Eastern Time, we have a FOMC statement, which is going to be very particularly interesting. It is the month of August, so it's going to be interesting to see what the statement says about the potential for a rate hike next month, or December, or maybe next year. So that's going to be interesting. Let's see, something is missing here. Ah, there it is. There it is. Core inflation rate. There. FOMC meeting minutes. We have inflation rate as well, and some lighter and medium news. Alrighty. Is the sound okay, by the way? Yesterday, my mic wasn't correctly connected. Good morning, Beverly. Great. Thank you so much. Thanks, BT. Thanks, MJ. Perfect. So your dollar moved down to the 50 to 61.8 fib. And, well, that's the zone, right, that people are looking for, or I was looking for, right? I think that when price was here about halfway to 38 to fib, 38 and 50, we were saying yesterday that there's a good chance that it can dip a bit lower to these fibs. Now it again went in between kind of these fibs, but okay, that can happen. At least it rehooked back or retraced back to the trend line. It went back to a 50, good 50 fib, 61.8. Those are a bit, especially if you're in a corrective zone, like on the euro dollar. All in all, of course, looking at this 4-hour chart, you can see it. And the 50 fib is a bit more solid, let's say, than the 38.2 fib. There's nothing wrong with the 38.2 fib, but it's a very shallow fib. Price can retrace a lot deeper. It can retrace, there are 4 fibs below it. So ultimately, there's a good chance it could go lower. Unless, of course, it's a wave 4, for those that like wave analysis, you could use that to your advantage because wave 4s look like this. You have an upside, correction, an upside, and then you have like a bear flag, sorry, a bull flag or bear flag. And those don't go deep. Those do tend to be held by a 38.2 fib. Those, of course, are interesting spots as well, but that's a typical wave 4 situation. Otherwise, if you're in a correction like the euro dollar is, then the 38.2 is quite weak in general. All right, so that's why I prefer the deeper bounce. So far, we've had from this turning spot, we broke through this resistance trend line already, moved up some 40, 45 pips. Now, what if someone didn't catch this bounce? Let's take a look at that then. Because this, of course, trading it here at 110.30, 110.25 is a fib trade. It's a fib bounce at the 50. So now what? If you're trading the fib and you don't catch the fib, there's always the chance to take the breakout, right? Like a breakout of this trend line. That would be another way. Could have been done on, for instance, this chart, a break above this particular 30-minute, 50-minute high, entry above it, and the trade is up a few pips. Not much, but it's pushing a bit. That would be the second way. That also is behind us. That also happened half an hour ago. The alternative would be another breakout or perhaps a pullback, if desired. Sometimes, the breakout doesn't look good and you don't want to trade the pullback. One way we can keep an eye on how the breakout looks like is this 4-hour candle. For instance, this 4-hour candle would indicate, is this a big wick here at top? Looks a bit like a failure. If it's a strong candle, could wait for retracement of that candle. Could even put a fib on that candle in a way. If it's a strong close, not too far from the high. And perhaps it'll look like the 50 or the 38.2 fib, somewhere in here for the bounce. So then then in this case, I'm using basically a smaller fib on a piece of the bounce that happened at this 50 fib. Anyway, so that's of course using the fibs on different levels. One is a very high time frame. This is a very small fib in a way. So it's, the rhythm of the market is always this break or bounce, break, bounce, break, bounce at various spots. And the bounces are going to happen at trend lines, at fib levels, pullbacks, and the breaks too. The breaks will happen also through fib. Sometimes we break through a fib, like we broke through the 38.2 fib here. We bounced at the 38.2 fib, but then broke through it. So there's always these constant breaks, bounces, and if you're trading discretionary, at least, it's my judgment to see which break or bounce I find the most interesting. And fibs are a very good way of estimating that. You can use confluence to estimate it too. Obviously, experience helps. And using, as I said, confluence, using other tools to judge, and in general, also using the idea of what is the trend and how much space is there to the next support or resistance. That also gives an idea about how do we find that particular bounce or break interesting to trade. If a break occurs and 5 pips lower, there's another support level, then it's not so interesting. Right? So now let's take a look. This is 9 o'clock. All right. So at the top of the hour, we need 2 more hourly candles before this 4-hour candle is closed, if I calculated correctly. So that would require a bit of patience. That would mean the trade on the euro dollar long, right, would not occur before, let's see, 10 a.m. London time. After that, the retracement could happen. That's one way. Other way could be perhaps to look at a 50-minute chart and are there any trend lines here that could be broken. Not really, right? This is broken, this trend line. It perhaps broke this trend line already. That's an early break here. This is more of a confirmed break, let's say. And now we don't have any break here. So perhaps a Camarilla, we would have to use a Camarilla perhaps. And you can see we're at the H4. Also, really not a breakout is not really that interesting, I think. I would rather wait for a pullback back to maybe the H3 pivot, roughly back into the moving averages here. As I said, with 2 hours from now, within the next 2 hours, would it be interesting if price makes this retracement within the next 2 hours instead of 2 hours from now, before this 4-hour candle is closed? Maybe. Sometimes yes. Depends on the news. I mean, if there's big Euro news, probably not. Let's see. If there's not so much going on, that could make it a bit easier. There's not much going on. Some medium, but this, between kind of bounce trade before 4-hour candle close is possible, but you have to be a bit maybe more careful, a bit weigh your options a bit cautiously, because this otherwise, if you look at the 4-hour chart in the meantime, whether this is a 50 fib or not, it is a 50 fib, but still, the fact that we got a bounce at this 50 fib doesn't mean necessarily that we don't have already this in play in a way. Those are lower lows and lower highs, and the last 4-hour top is still here. Ultimately, a breakout from a 4-hour point of view above that resistance is important. As you can see, besides that 50 fib, by the way, just as a side note, what else is there? As Beverly was saying yesterday about the long-term moving average, here too, a very neat bounce at the long-term moving average. Right, just as an extra. Anyhow, so that would be the confirmation. So we are kind of in a, let's say, in a spot where both sides are fighting quite hard, or I don't know how to formulate it. I mean, you have reasons to see a bullish bounce, but you also see reasons to see a bearish kind of development here going on. It's definitely not fully in play because the moving averages are still bullishly aligned. So it is kind of a tug of war here. It's kind of in a, almost let's say a no man's zone, or it's like a neutral zone perhaps. BT is asking why would I think it goes up instead of down. From that point of view, it is indeed a bit disputable because it is in this kind of questionable zone. So it's a good question. Ultimately, if you look at these two momentums like this, therefore perhaps I think there's a slight edge, to the upside because of that. But also the moving averages are aligned, bullishly aligned. The 21 is above the 144. So those are maybe small things I would say, and we did get a bounce at the 50. Small things that we might see the rally from here. But it's very, very, very small, I would say. It's not much really to build on. And a break of this 4-hour fractal to really get out of that downside here that's occurring would be good for bulls. Now, if we start breaking below this, then we're continuing with this downside momentum that we see here. The next target will be the 61.8 fib. Let me put it back on. And that's not too much space actually. So scratch that, that's not really a target. So that's, the principle of wide open spaces or no open spaces is actually quite clear, I think. When we break this support level, what is the next support level? Is the question. Right here. Is that a lot of space? No. Not compared to what probably will be the risk, right? So that's not doable. But if we break below, if price does break below the 61.8, then we get into a bigger zone here. So far, only this for downside, or let's say this for upside like that, is the zones where we have a bit more confirmation maybe. All right. Now in between here, in between these red levels, there could be some trades, but got to be a bit cautious. That's why maybe a 4-hour candle is a bit better than looking for pullback on a smaller time frame the next 2 hours. Yeah, I think that's it. Let's move over to the pound dollar, and to answer BT's question, well, I took holiday in May, so I probably will wait till probably planning something in October actually. So yeah, I wasn't really too convenient this month, but I was already in Italy for a week in May, and probably will visit my home country in October. Let's see. That's the plan. Still trying to organize it. So let's see. Pound USD. Well, we got the big news event, and yeah, that was bullish. We got good momentum after that, right? And we're seeing a bit of a retracement. And often more than not, we see the prices kind of lingering in the middle at this moment, with the momentum to the upside, but also a bit of momentum to the downside. Right here. This could be a bear flag. So often enough, it's more about establishing I'd say, levels that are interesting. Then at this moment, there is no trend. Let me say it this way. We've talked about the pound dollar already a lot. There is no trend. So it really can go both ways because of that, in my opinion. It could go back to the L3 and go back to the long-term moving average and complete kind of a zigzag like this, right? And we can use fibs for that. We can put a fib. Let me use a different chart here. We can use fibs for that. We can place a fib on this momentum and place a fib on this first correction. And one of the confluences we see here is a minus 272 target and a 61.8 fib. That could be an interesting bouncing spot. There's also an L3 Camarilla. The second one will be the minus 61.8 and the 78.6 fib. When using fibs, the best is to use the invalidation level, which is the bottom here. Some traders use tighter stop losses, but that's a different topic. Let's see. So those are, that would complete the zigzag. Could be interesting to go for longs there. Now the other option would be to short it to the fibs when breaking maybe this bear flag. Oh, that's a more advanced trade in my opinion, because there is a pretty good, I think that obviously this momentum is still stronger than this momentum, just because of the size and pips. So shorting against such a bullish momentum, I think, is riskier. It's more advanced. There's not a lot of space between the bear flag and the target, the first target. So I think it would need more careful management of that trade. It's a bit more difficult. Now, how about if it doesn't get down to these bouncing spots? Obviously, these are not guaranteed bouncing spots. Nothing is, but they seem decent. But what if they don't get there? So in that case, let me get rid of these fibs. I think this should be okay. If you have questions, let me know. What if not? Well, then it would have to be a breakout. Obviously, price is now moving away from the fibs. So if it's moving away from the fibs, we cannot use the fibs. If it wouldn't move away, keep moving away from the fibs, then obviously these fibs down here are not going to be reached, right? So from that point of view, the only option would be the breakout. Is there anything of a breakout that could be interesting on the pound USD? And well, it is trying to push through this zone. It was pretty clear, right, in our analysis that the first time had a high success, decent chance of not pushing through. With this wick, it didn't. Now it actually pushed even further, and I think there's a better chance of pushing through now. This is kind of the second attempt in recent history, and it seems to be when that happens, there's always a bit better chance. I don't think there's any clear trend line available, unless you're maybe using perhaps this channel, like that, in the top of that channel for establishing a breakout, which is here. But rather than doing that, perhaps let's take a look at the Camarilla. Well, H3 157, that probably makes sense. A break above 157 would, signal the end of this resistance, the importance of this resistance zone that had a low point of about 156.50 and a high point of about 156.80, 90-ish. So once price does push through 157, we're really getting into a territory that's clearly above that red zone there. And this is then changing the dynamic. So yeah, longs as a breakout above that makes sense. Now, if I'm looking for a breakout using Camarilla, by the way, which we just talked about yesterday, then I don't typically put a pending order here. What I do is I wait for price to get there and show me a fractal just above it, right at it, or at H4 perhaps even. And if it is a fractal at H3, I typically then go above the fractal. If it goes to H4, I typically more look for a pullback to H3. But here there is that zone, and that could be intraday potential, I'd say, to the upside. All right, so that's my view. If you have questions, let me know. Otherwise, dollar yen still going sideways. I think that dollar yen, I have little, let's say, expectations, or don't expect really a big movement before this FMOC, especially from the dollar yen. And it is already going pretty sideways like this. Doesn't look that interesting. Aussie dollar does not look that interesting to me. It's like yesterday, I said here it was somewhere in here. It moved a bit down. It's just not appealing. Same for the Kiwi. Dollar CAD ultimately still in the zone. Also thought it was a pretty big choppy move. As far as I remember that I was talking about it yesterday. It's trying to push through this trend line, really didn't manage to do that, to break above it. So I would move the trend line like this. When you see a trend line like that being trying to be broken, but it fails, you can leave the original trend line. You can move the original trend line to incorporate the new resistances, or you can really draw both and try to draw something like this, for instance. Then you're kind of not a single point on the chart, but you have a zone of resistance by 2, maybe 3 trend lines. That's another way. Also, this trend line got broken. I don't see a particular fib that I would like to use, maybe only this one. And what do we see? Well, let's take a look. We see roughly, sometimes it's not precise, but we see here at 23.6, we see here roughly 50 fib bounce, we see a 61.8. Here, disputable, but okay, let's give it benefit of the doubt. Let's say 78.6 fib bounce. So what would be the next fib potentially? The 886 fib. Or maybe still the 78.6. Oh, well. Because of the fact that it didn't hit exactly, anyhow. That could be the next bouncing spot. So from a bearish point of view, perhaps a counter trend breakout here, but not sure if that's so appealing. Moving on to perhaps the euro-yen. Yesterday we were talking about the euro-yen. And the fact it could bounce about 137. Or it's actually two things. It could either bounce here, 137.50, or otherwise 137. Eventually did move to 137. I found it quite interesting because ultimately we were looking for a momentum yesterday. Wanted a momentum about up to here that could break through some moving average, some of these tops, then look for a hook back, right, and look for a long there. Ultimately that didn't happen, so I avoided it. Also, the time factor that I was looking for was 1, 2, 3, 4, 5, 6 candles not breaking this bottom, and the sixth did break it. So this kind of formation giving an indication that probably the bounce not happening at the L3 there of yesterday. And we did kind of get a move down, slow but surely, down to the next support level, which was indicated at 137. And I believe that was a fib. Maybe not this one. I then probably use this one, I guess. Yes. Pushed a bit through it. Anyhow. $137 ultimately, the round number perhaps giving the support, but the 50 fib was close by, if you fib it like this. And not sure what a 136.80 could have been actually a bouncing spot too, if you look at it. But anyhow, didn't see that yesterday, I think. But anyhow, it did bounce there, and yeah, now we're getting kind of a rebound. But the thing is, like, how far can this rebound go? Well, the euro is breaking up, so that's a good sign. The dollar yen is not moving, so that's neutral. The breakout of this trend line, good sign. Here too, though, the 4-hour world is important, and will this 4-hour candle hold? Will it be a good candle? So let's see, Beverly took a long at 137.20, so great job for acting on that. And you know, in my opinion, I think it's important to keep an eye on this 4-hour candle. If there's a big wick, it could be good to move the stop loss perhaps below this euro yen low. Maybe, you know, maybe even now already. In fact, I'm not sure if it's not worth putting to break even at this point. In fact, I mean, trade is up 30 pips. Entry at 137.20 or lower, or even up to 137.30. This candle low is already, it's not closed. I know, I don't want to advocate decisions too soon, but I think that there's this candle initial open is here, so I think it's okay. Really. If you want to be maybe more precise about the candle closing, you can wait still, but I think it makes sense. Because ultimately we have the same as the euro dollar, that this is, moving down like this, and this is still a high here with moving averages above it. So yeah, there could be a move up and then still a move down and then up like that. So, well, but 137.20 is quite low. So even if it goes up like this, let's say it goes up like this and moves down like this, there's a good chance it will bounce somewhere above 137.20. It might just tag it and do up that, but that would be unlucky. It could happen though. The alternative could be just to put the stop loss just a tad below it here and still maybe take a small risk of a few pips there, but that would be the other idea. The low point, yeah, that's a good observation, BT, that the low point, if there is a low point, if there is a lack of momentum occurring at the end of London, at London close or close to it, those are pretty sweet moments and give it extra confidence. There's an extra reason to think that's a good, trade, because London was seeing a downside indeed, but when London closes, typically then the market just gets a bit quiet. New York goes for lunch and stuff like that. So that's actually a good extra reason. So when we look at let's see, the London close roughly around here, right? Well, using my candle rule, let's see, 1, 2, 3, 4, 5, 6 candles. 7th is here. I'm not sure if this is a bit lower. Maybe technically it's just a 1/10 of a pip lower. Let me check. 2/10 of a pip lower. So if you start counting from this candle instead of from here, okay, 1, 2, 3, 4, 5, 6, 7th candle I'm breaking. So in that case, using the time factor rule, an entry could have been on this candle at roughly this price, using this 30-minute chart, roughly about 137.14 plus spread. And let me check. About 2 pips here, not much, so about 60. Waiting for hourly candle would mean 1, 2, 3, 4, 5, 6, 7. That would be here, this candle. And the 4-hour one is actually still waiting for the hook back, probably. It's still waiting for the 5th candle. This is only the 3rd. That's why I'm saying that regarding the euro dollar, euro yen, is that this was perhaps a good bounce, but we don't know how to react here in resistance because this is still only the 3rd candle. Anyhow, it could become maybe a bit confusing by using too many time frames. That's why sometimes if you're using time factor, it could be just good to use it for one time frame. Just use it simply on the hour or 30 or 15-minute chart. If one is looking for a long on the euro yen, for instance, yesterday here, then that could have been just used with as an extra confluence time factor to perhaps establish a long here. All right. Yeah, that sounds good, but really good plan, I think. Makes sense. So from that point, anything that is still perhaps interesting, let's take a look. Does anyone have something in mind at the moment? Any particular pair you want to take a look at? Euro pound. Let's take a look. Yeah, we can take a look at indeed pound yen, pound odd, makes sense. MJ has a crystal ball. Wants to take a look at the ones that will move today. Pound does move a lot on average. We looked at the heat map yesterday. Pound was a big mover indeed. Let's see if that changed. Yeah, pound odd, pound New Zealand, pound cat still, pound yen, pound Swiss, pound dollar. Yeah, that's quite quite clear. So that would probably be the next one. £0 first of all. Anything particular, BT, by the way, that you find you would like to discuss? I personally don't see something very interesting. It looks like a mild channel to the downside here recently in this part. No problem. Just checking maybe you saw something in particular. Otherwise, it just, this channel does not, I mean, there is a channel perhaps going on here, but it doesn't really seem that interesting. Let me get rid of all these moving averages, I think. 1 second. Really, the higher time frames are also quite sideways. Maybe the 1 hour chart can help that a bit. Let's see. Well, we have some good 30-minute momentum to the downside. We don't have any divergence. So on this 30-minute chart, it's actually looking more interesting than the 4-hour daily chart. That can happen sometimes. From that point of view, no divergence between these bottoms and the oscillator here. So now correcting back up. So could be just a bouncing spot right here at the 38.2 fib. Any these fibs perhaps 50, 61.8, or maybe below this bottom here, this bottom trend line, support trend line. That could be some things to look for one more downside here. As a follow through of this this downtrend so far. All right. Pound yen looking very similar like a pound dollar. So from that point of view, kind of same thing. It could make here a zigzag down to support. That could be interesting. The alternative would be if it breaks above TH3. So this seems to be kind of like in the middle. Either let it maybe go back down or break above. That I think seems the same like pound dollar. That's because of course the yen is really not moving. The Aussie didn't move too much, so perhaps the pound odd looks the same. Roughly it does. Okay, yesterday we talked about the fact that I think price was here, that if it breaks above this, there could be some rally. Bit of rally we did get. It didn't go, I mean, a whole lot. Well, from pound odd point of view, not a lot. I mean, it's still from here to here, about 120 pips probably. Relatively small for the moves that it makes. This is probably 400 pips. Yeah, from this point of view, I like the pound odd potential to bounce as well to the upside. I like the fact that it did break above this moving averages. Got moving averages aligned to the upside. Got good candles above the 21. Now it's just probably looking back for a bounce. That seems interesting. Maybe more so than the pound yen or pound dollar because they are still quite in a range. Well, not to say that the pound odd is that trendy on the 4-hour chart, but at least on the daily it is. On the daily, we see engulfing twins. We see a candle close above the 21 again. The second time, we had it already here. Once, twice. Candle low, bottom here is important. Can't break now through that. Yesterday was still, the question whether here it could go lower. Now that we broke above here, right, I wouldn't expect this bottom to be broken anymore. That was different yesterday. So maybe this one is perhaps the most interesting. $61.8 seems nice with the moving average. Anything else? Let's see. Pound New Zealand. Anyone who likes triangles might want to keep an eye on this one. Let's see. We have price bouncing yesterday twice. Did this kind of short shy of that resistance level. I think it was the pound CAD. I'm not sure. There was one of the pound pairs that had a big daily, couple of daily negative candles. Here's one and another wick. So the CAD, you might want to be careful with that. Let me take a look at the pound odd again. Oh yeah, that was this daily candle, but now we have a big bullish candle, so that does change everything. That does change the dynamics a bit. Let me take a look at pound yen daily. All right, anyhow, yeah, from that point of view, pound CAD not as good as pound odd. I think pound odd the better one here. Yeah, so Fibonacci basically, I mean, we can use it for retracements, we can use it for targets, we can use targets and retracements to identify confluence. We can use it with multiple retracements or multiple targets, all to find confluence. I mean, confluence is good for fibs, give us a bit more reason for price to do something, a break or bounce there. And we can use fibs, of course, with other tools as well, trend lines like we did, moving averages, to ask later to get more confluence. So, yeah, any questions on fibs? Nanneth and I are going to have actually a Fibonacci webinar, an extra Fibonacci webinar next week. If anyone is interested in joining, send me an email. Let me write that down. Let's see. There we go. If you want to join the Fibonacci webinar next week, just write me an email. Let's see, pound yen. Let's see, get stopped out. Yeah, pound yen is a bit of a wild ride. I mean, I recently saw a movie about bull riding, or not. It was actually just a normal, not a documentary. It was just a how do you call it? A movie that was about a bull rider, and also had a story of the past intertwined. And so if you look at bulls, some bulls are a bit more wild than others, perhaps, and pound yen, I would say, is one of those, one of the wildest ones. And yeah, it can be difficult because of that. It does move a lot of pips. I mean, the pound in general does, pound yen maybe even more so. If you notice that you get stopped out by the pound yen a lot, I would even say try just not trading the pound yen, maybe. That could be maybe even the best. If you see more success in other pairs, maybe just focus on those. Doesn't mean you always have to for forever, right? You can always go back to the pound yen later on and see if you can try it again. Maybe now maybe there's a bit of psychological aspect to it, because if you get kind of in that vibe that the pound yen is something that kind of leads to losses, it might have effect on your trading. So if you set it aside for a while and go back to it, maybe you have a fresher approach. All right, let's take a look maybe at some exotics. Here too, the CAD is kind of strengthening. Good push down. Looks like we're going to have, CAD seems to be one of the winners here at the moment. Against most of the pairs. The CAD is not really an uptrend, but it is showing some strength. DAX pushed through 108, 10,000, 850-ish here. Gold is seeing a bit of a earlier than expected rebound up again. All right, let's take a pair, perhaps. Let's see, which one could be, maybe, let's see. The CAD is retracing. The Aussie is not moving much. Don't like the Swissy too much at the moment either. Kiwi is not moving much. I don't think there's really much in these exotics, because it's really the pound maybe that has the most potential, I would say, in its movement. If we look at the heat map as well. Yeah, so I think that's really probably it for what I see today. I don't want to keep us longer than needed, really. I think that if I look at the ones that, looking at the heat map and everything, maybe pound odd could have the most potential. Otherwise, maybe your dollar and maybe pound dollar as secondary ones. That's it, I would say. Dollar CAD, perhaps if it goes lower, up to, down to 129 maybe. There's not a lot. Bike ride sounds maybe good indeed. There's not. I mean, it is August. I don't see much. It is FMOC tonight, so it's definitely not a big. It's definitely maybe a wise time to do it. The combination of August trading in general and an FMOC and a market that looks pretty choppy could definitely warrant a good bike ride indeed, or anything else you want to do, because I don't see much. I mean, if anything, then maybe I will keep an eye on the pound odd and pound dollar and euro dollar probably. But let's see, the indices in general are showing weakness. Do you think that might be linked to August and less liquidity? I'm not sure about that. I mean, typically stock markets do that kind of retracements, and as far as I know, at least, I don't consider myself that expert of that. But as far as I know, indeed, that tends to happen this summer. I mean, if that is the reason for maybe more downside now, I don't know. I mean, there's also a lot of fundamental things going on, I guess, with still Greece and some negotiations with the IMF and political problems, perhaps with the Greece negotiations in Europe, and there's China and its currency going on. So these could be also factors, perhaps, that have an impact besides the August and liquidity. All right, folks. Well, let me take a look at the remainder of the webinars, and then we'll wrap it up. Thanks so much. And here we got Heikenesha tonight, Nana. We got tomorrow swings. We're looking at the correct swings, both at 4 p.m. GMT time. That's 6 p.m. Central European time, 5 p.m. UK time. Yeah, the impact of those is. That's why I look at technical analysis myself, because difficult to measure. I think personally, how much these events have, what kind of impact. I'm sure if you dive into a lot of fundamental reports, maybe you can get better at that. But I do like technical analysis because of indeed just looking at the impact itself. And when I look at technicals, I see still a bottom close by, but I do see a downtrend at the moment. So I would be on the sidelines for the moment. But Beverly, if you're interested in more fundamentals, I guess probably news sites would be good. I myself, I've heard that the Chinese devaluation or Chinese currency adjustment maybe is not so good for DAX. So maybe that's why we're seeing a downside. All right, folks. Well, thank you so much, and have a good day, whether it's trading or indeed taking a break. Be careful of FMOC in general. That is later today, and wish you good trading, and see you soon. Cheers.